Hey, what's going on, everyone? I hope you're having a fantastic day. So, what I want to do today is a market review as to the price action that occurred on January 23rd, 2023. And what I'm going to be going over is an example of what was going on to my mind. I'm going to be showing you the narrative that I was thinking about and a potential entry that I could have gotten in, but I didn't because of a certain reason. And I'm going to be going over all that today. This was the range that I was working in. We had this big long wick down here. So obviously, we have a fair value gap right here. Lately, I've been going over the ICT mentorship and just going over month one and month two. I was feeling pretty bullish today because they call it the low resistance liquidity runs because there's not much of a challenge that price has in order to continue going upwards. So in addition to that, another reason why I was feeling bullish was because the process of the swing high was over. The open of this candle was 115.38.5. The close of this one is 115.54, and then the open of this candle is 115.46. Okay, so I thought, okay, you know what, my 3 bar pattern, we've solidified that there's a 3 bar pattern because we have this candle break down lower. So on Friday of last week, based on how Friday acted, if price was going away from this range as quickly as it did, I wasn't expecting for Monday to, create a price action where it bounces off this fair value gap and then keeps going higher. I thought, you know what, maybe the reaction will be more direct. We're just going to see price keep going higher, higher, and higher. So now I'm going to go into my 30-minute chart right here. And I'm trying to put in the daily narrative, right? I'm trying to see the power 3 come along. And again, quick refresher if you don't know what power 3 is. Power 3 is when price creates the daily candle in the form of 3 steps. So we have your accumulation, your manipulation, and your distribution. Only to have, another form of manipulation come back down and then finish the day with the consolidation. So this was the narrative I was seeing, right? We have the Asian range that is represented by this blue box, and we have the London range, which is being represented by these 2 lines. The London range is high and low. When I logged into my computer, which was around 7:30 ish, and I saw that we acquired the sell side liquidity of the London lows. So I thought to myself, maybe this is a form of Judas swing where price dips into this, right, in order to create the incentive for sellers to participate in the market, only to have them liquidated and then have price reverse on them. Because again, we're operating under the idea that the bullish range, we're going to see higher prices. So where's the next target? Well, we have London's highs, which is being represented by this line, where there's a lot of buy stops. So I thought to myself, after we've acquired the sell stops from London lows, there's a high chance that perhaps now we're trying to acquire the buy stops from the London highs. This is where I started to combine my market structure with the narrative of today's market conditions. And I'm going to go here to my 15 minutes. And I saw this range develop, right? We have 1, 2, 3. My 3 bar pattern here developed, represented by this blue line, and it kept going up. Now you'll see here that the open of this candle, which is 116.38.3, and the close of this candle, which was 116.38.4, this candle's close is higher than the open of this candle by just like 1 point. So to me, that doesn't really mean that the trend is over. Instead, it's going to keep going higher, and it did. Why did it have to do that? Well, to acquire the buy stops of the London high. Now, if we're going to see a reversal at any point, it makes sense that we're going to see it up here. Coincidentally, on the 6 minute, here's the end of my 3 bar pattern intermediate. Now here we have the sell, which closes at 116.26. Another sell here that closes at 116.23. So the close here is lower than this close. And then the open is 116.24, which is higher than the close of the previous candle. 1, 2, 3, and then break. This is my second range right here. And now, what did I tell you in the previous video? I want to see a reversal going along back into the discount so that we can see price react, a point of interest, give us a fractal, and then make it go higher, right? Because the idea is that you want to be buying at a discount area and then have the market provide you a fair value gap following certain conditions, and then once it gives it to you, you take it. So that's when I started to look for my entries. And as you can see, I tried to get into this kind of range 3 different times, right? The first time it was legit a loss, but because of the spread and because I was working with such a small stop loss, I only got down like a little over half of 1%. You could say that it doesn't really matter, but really I'm trying to take this seriously. So, being down 0.6%, I mean, it kind of does hurt a bit. The second entry here, you'll see I got into it. I would have considered this a break even, but then the third one, it was when it really did hit. So fortunately, due to time, I'm just gonna be going over the one that actually ended up potentially making me a 4% day before the market opened today. I don't want this video to be long, but just so you know, it took 3 trades for it to be actually profitable, right? This is what I'm saying. Like, you'll see that trading is not really 100% perfect. I'm liking the way it's behaving, right? It's retracing, it's coming back down, right? Because after a consolidation, you get an expansion. And after that expansion, what can you get? You can get a retracement or a reversal. In this case, we got a minor reversal, right? Why? To acquire sell stops and to create a fake Judas, right? To incentivize those sellers to be like, hey, it's going to keep going lower. No, it doesn't. So price creates a reversal. So from that reversal, it goes back to consolidating. And then we have another expansion. Now from this expansion, I would like price to come back and retrace back to a point of interest. And you'll see right here. So now I'm going to go down to my lower time frame to seek that fractal. So as you can see, what do we got? 3-bar pattern. 1, 2, 3. Price breaks down low. And then what do we got right here? 1, 2, 3. I'm looking at the bodies. I'm not looking at the wicks. So from here, I'm going to base off my trade, right? Because this to me is what I consider the breaker entry. And now I want to include the wicks when I'm doing my entry, right? Just to be secure. We have our displacement after collecting the buy stops of this short-term swing high. And then what does the 22 mentorship tell us? We want to get in after we break short-term swing high or low. In this case, we broke a short-term swing high. So another reason why I was so confident into getting into a trade like this was because I had SMT on my side. So if we take a look at this intermediate swing low right here, we see the price dips into it, right? So we're going to get that point of reference right here and then match it to this. And now, were these lows tapped when this was occurring? No. Now we're going to go into the US 500. Were these lows tapped when price was creating this fractal? No. But this one was. So that's when I was confirming myself another way that, like, yep, this thing could actually work. And now we have our range that we want to be working in. And now, where is our entry? Well, our entry is inside the fair value gap right here. You see that? I'm going to label it orange. But here it is, a little fair value gap, inside discount, possibly even touching the OTE or the optimal trading entry. So I'm going to have price tag us here in, and look what ended up happening. After we acquired those buy stops, price dipped into down here. Here, try to worry you. This is why you gotta be patient. And then once we cross the zero, that's it. I'm breaking even. All in all, this was a good trade right here that I could have gone, but I didn't catch it. Why? Because my psychology was a little off. Once again, I've said to y'all, I took 2 trades prior. One was a break even, one was like a minor loss. So going into this setup, I was like already kind of a little bit fearful. So I didn't take this one. See, this is why it's more than just like statistics, right? Because if you're not okay up here, if you're concerned about what's going on up here, then things will falter. So that's what I'm trying to show you. Today was a very good day in trading. I mean, I didn't take this, but it is what it is. Moral of the story is that you have to have good psychology when you're trading. When you see a signal, you take it. You kind of have to be like a robot, but sometimes the human element comes in. That's what makes this feel so hard. And look at what ended up happening. During market open, they shook out all those longs, probably people who were in my position. They shook them out, make them reach their stop loss, only to then have that expansion keep going up. Where? To last week's high. So now you see how I was able to get into a trade because I had some form of bias. I had a narrative going, as well as I had market structure going on my side, right? The 3-bar patterns guiding me. I had my point of interest, right? The sell side liquidity, and and then the fourth thing is that we had the fractal price entry. So once again, I hope this video serves well. You get to take a peek into the way I trade the markets now and the way I've been learning about ICT and how I'm incorporating his logic into my trading strategy, if you will. As I'm saying in every video, I'm still a student of the ICT, so my trading way is not 100% always, but it is. I'm putting these videos out there because it helps me reestablish some things from my notes, and as well as I can use these videos as like a way that I can reference them back. Hopefully this serves as a way, as a look into students, into an ICT student's notes, and to see how we are learning this subject altogether. So yeah, hope you have a fantastic day, and I'll see you in the next one. Take care.